The next question is E16.4. On January 1st, 2022, Lin PLC issued a convertible bond with a par value of £50,000 in the market for £60,000. The bonds are convertible into 6,000 ordinary shares of £1 per share par value. The bond has a 5-year life and has a stated interest of 10% payable annually. The market interest rate for a similar non-convertible bond at January 1st, 2022 is 8%. The liability component of the bond is computed to be £53,993. The following bond amortization schedule is provided for this bond. So the question has provided us with the table. So the first instruction A is to prepare the journal entry to record the issuance of the convertible bond on January 1st, 2022. So remember, first of all, we need to calculate how much is the equity component of the convertible bond. So we take the whole amount of the bonds altogether, it is 60,000, and then minus with the liability component 53,993. So we'll get the equity component of 6,007. Then the journal entry is debit cash 60,000, and then credit bonds payable 53,993, and then credit share premium conversion equity 6,007. And then B, prepare the journal entry to record the payment of interest on December 31st, 2023. So you just go back to the table and you see the row of December 31st, 2023. So it is provided already for the number. Okay, so the journal entry should be debit interest expense 4,265. So according to the table, and then debit bonds payables 735. Okay, and then credit cash 5,000. Okay, so remember, premium will decrease the interest expense. And then C, assume that the bonds were converted on December 31st, 2024. The fair value of the liability component of the bond is determined to be £54,000 on December 31st, 2024. Prepare the journal entry to record the conversion on December 31st, 2024. Assume that the accrual of interest related to 2024 has been recorded. So if it is a conversion, no matter how much is the fair value of the liability component, it won't be used, except it is a repurchase. So we can just go on to the row of December 31st, 2024 to see the how much is the carrying amount at that date. Okay, so the journal entry, debit share premium conversion equity 6,007. This is just use the first time. Okay, and then debit bonds payable, so use the carrying amount of the liability component at the date of the conversion. So here, 51,783. And then credit share capital ordinary. So as we can see, the bond itself only one. So if the bond is exercised, okay, it will become 6,000 ordinary shares with £1 par value. So 6,000 times 1. Okay, that's why here the share capital ordinary is 6,000. And then credit share premium ordinary, just the difference of the debit credit. And then D, assume that the convertible bonds were repurchased on December 31st, 2024 for 55,500 instead of being converted. As indicated, the liability component of the bond is determined to be 54,000 on December 31st, 2024. Assume that the accrual of interest related to 2024 has been recorded. So this is a repurchase, so we need to determine whether there's a gain or loss on the repurchase. So because the carrying amount is less than the fair value, okay, so it is a loss on repurchase, of 2,217. And then we need to recalculate the equity component, at the date of repurchase. So the fair value of the bonds altogether at that date is 55,500. minus the liability component at that date 54,000. So the equity component is 1,500. And then the journal entry will be debit bonds payable 51,783, the carrying amount. And then debit share premium conversion equity 1,500, uh, just what we have calculated. Okay, and then debit the loss purchase 2,217. And then credit cash 55,500. The last one, assume that the bonds matured on December 31st, 2026 and Lin purchased the bonds. Prepare the entry or entries to record this transaction. So it is just a repurchase on maturity. Yeah, very simple. But first of all, we need to record the interest expense first. Yeah, before we record the repurchase. So we go on to December 31st, 2026. The data is here. So your debit interest expense 4,074, debit bonds payable 926, credit cash 5,000, and then you can record the repurchase. So if it is at maturity, debit bonds payable 50,000, credit cash 50,000.